Right, this is a special lecture targeting the very first exam paper, online paper, December 2020. So, ABR SL1, especially my lecture connects to 45% of the syllabus, governance, assurance and ethics. But if you have already gone through this paper, you can see that essentially corporate governance has been tested to a great extent, and there are some other questions from internal control. So, what we are going to do during next probably 2 hours is that I am not going to just run through the previous paper. I am going to analyze. I don't take a lot of time because I am sure by now you have gone through pre-scene many times, but I will go through few slides where I have summarized pre-scene, and then we will go through the exam question, what examiner has tested in the first paper, right? And then I will also take you through some of the the questions like that you can expect in the subsequent paper in terms of the pre-scene, especially what are the other areas that you need to prepare. So, therefore, the main purpose of the lecture is to go through December 2020 paper. While I do that, I will also give you a very high level summary of what you need to be aware about this section of SL1. So, what you can see now in the slide is the integrated perspective of this subject, where governance and NFR refers to non-financial reporting, that covers 15%, and then ethics 5%. So, very clearly you can see in paper December 2020, governance and ethics has been tested, and in the, because we know there is, especially if you look at the upcoming exam, using the same case study, a question can be raised from integrated reporting, right, that is non-financial reporting. In addition, there is a 25% of this paper which talks about risk of misstatement, and in this paper, because I am talking about December 2020 paper, this area has not been tested much. So, therefore, we will mainly talks about corporate governance topic. So, corporate governance at a glance, you can see there are 3 segments that examiner can test, and out of the 3, one of the prominent topic would be board of directors, and there are many topics that can be tested under board of directors, especially one such famous topic is board effectiveness. So, in addition, there are many other topics that can be tested in terms of board of directors, especially non-executives, the independent directors, the role of chairman, CEO chairman split, etc. And then audit committee is another popular hot topic for exam purpose. Audit committee can be connected to again different other topics such as internal audit. So, internal audit committee is oversight on internal audit, and then there is another topic which is theory and practice of corporate governance. Of course, that is where you have to reflect some fundamental understanding about, if I take that part out, is different perspectives as to how corporate governance can be explained. If you are a student going for the exam, I am probably connecting about 10 pages in one slide. Are you able to explain corporate governance from operational perspective, relationship, stakeholder, financial, economic, societal? If not, you may have to go through these areas briefly. So, I am just, before I get in straight away to the paper, just emphasizing certain areas that you need to be very thorough in terms of theory. Now, this slide covers most of the learning outcomes relating to corporate governance, right. There are, as I already said, one of the hot topic would be board of directors. Actually, these topics connect to theory and practices. Under theory and practices, one of the hot topic would be this limitation of corporate governance. So, that is where for the exam, when you prepare for exam, this is another possible area that you need to be aware, how corporate governance failures can connect to corporate governance failures, right. And then Yeah, and also be aware that there is a listing rule 710 which makes some of the corporate governance requirement mandatory, like having non-executive directors, independent directors, and some committees like remuneration audit committee, independence criteria. These are mandatory for listed company. This slide talks about that. And then coming to, I mean, that's about 5-10 minutes of corporate governance, because I am going to analyze corporate governance case study in SL1 first paper. So, this, as I said, you would have gone through many times pre-scene. I am not here to waste your time, but to make sure that every minute you will get some benefit from this session. Now, at a glance, this is what is given in the pre-scene, like a story. I mean, even when you have to remember this like a story at high level, because you can't expect again full reading of this information during the exam. So, this was started in 78, and just taking you through main evolution, and then as a healthcare drug, and then it was diversified as FMCG with 2 directors, Kamal Dias. And remember, these directors are very important. We need to know who are the main directors, and mainly Kamal Dias and Vasana De Silva, that is wife. So, they led this business, and then they are further diversifying into hospital in 2004, and then they are restructuring this company as healthcare and leisure, and there is emphasis that the vision and mission is connected to triple bottom line. So, this is where when you are preparing for the exam, expect in your exam probable question from integrated reporting, right? Triple bottom line, the benefits of integrated reporting, the 6 capital, how it works, the business model. There is a lot of emphasis in this case study to explain various elements of integrated reporting. For example, the effort of the company to develop employees, training them, etc. So, those are part of intangibles, the capital. And then 2009 they are investing in leisure business, which is led by Buwanaka Fonseca with 10% holding, and then logistic business, another director. Now, I have mentioned some of these as directors. See, one other thing when you prepare for corporate governance question is that from the pre-scene, are you able to identify who are the directors, are they independent? So, of course, when you look at the pre-scene, it is indicated in the pre-scene case study. I hope now while you watch this video, please have your pre-scene with you, and you can see in page number 4 at the end, it says there are 10 directors, right? There are 10 directors, of which 8 are executives, 2 are non-executive. Now, that is given in the pre-scene, right? So, then before the exam, you can easily expect some corporate governance issues in this case study, right? So, we will come to that, and I am just taking you through the high level story of the case study, like a timeline or how it has evolved. So, logistic business led by director Kaushal Pereira, and then they went into power and energy business, right, that is Sudat Pereira. Now, from board of directors angle, one of the question you should ask whether they have sufficient knowledge, whether these directors have industry domain knowledge, for example, knowledge about the power and energy industry, right, and then they have kind of purchased 5 windmill plants in 2016, and then when it comes to December, they are going to diversify further into different countries, especially 35% stake in Bangladesh. So, these are high level things. So, now what you can identify from the pre-scene is that in terms of board of directors, as you know, this is a paper that has been already tested, you know what questions were tested, but I am analyzing beyond that case study and also to help you to build your own answers, right. Now, the last page number 4, I am looking the pre-scene, page number 4, last sentence says the board of directors, which comprise of 8 executive directors and 2 independent directors who are experts in pharmaceutical and travel business, right, and they gave enormous tremendous support to make Edward's vision a reality. So, who is Edward? You know, Edward is the founder, chairman of this company, and as you know, Edward is already engaged in the business actively, which means Edward is not what? Independent chairman, and as you know, when the chairman is not independent, right, corporate governance code says majority of the board should be non-executive. That is a very powerful point. So, anyway, we will come to that answer. Now, from exam perspective, right, what you need to be prepared, one of the famous exam topic is 4.3.1 learning outcome, the board is effective or not. Now, examiner can test you giving information about board meetings, how meticulously they have prepared for board meetings, have they read the papers, have they got the information, have they debated issues at the board meetings and followed up, and what is the role of each board members. This is area that you can board meetings, and if in your open book the very first page says the information that need to be discussed at board meetings. And also be aware about characteristics of an effective board, right. So, effective board, these are, I am extracting some very powerful notes from the study text. If you want to say board is effective, right. Now, why I am showing this information to you before I analyze the case study, because these are essential knowledge, right, that you need to know before you apply this to a case study. Now, for a board of directors to be effective, there has to be a proper mix. Now, there I already mentioned, do they have relevant expertise? Now, I said they, for example, I will take example, have you seen a director in power plant in this case study? I mean, whether while they have acquired those windmills, is there any director with the domain knowledge about the power industry? May not be the case, right. And then the other knowledge of the directors, the mix of expertise, right. Board cannot have only accountants or engineers, it has to be a proper mix, and then non-executive should be able to contribute, right. And demographic balance is also important now, especially gender. Now, see, for example, in your paper, examiner can test women on board. There is a discussion to appoint women, right. You are supposed to comment on the benefits of women on board. If such a question is tested, what is your answers? Another topic which is relevant in board analysis, especially board behavior point of view, is 6 C's model. I hope you know these words, right. 6 C's refers to commitment of board members prior to board meetings, the level of preparedness, right, and the character, that is about the integrity, honesty, all of that, collaboration where the board members are working together, do they have expertise, and then the creativity and contribution, especially contribution to strategy. So, I am warning you, right, while you prepare for the exam, make sure that these critical theoretical knowledge that you have, and the diversity is another hot topic. Right now, examiner can ask you a question, what are the benefits of diverse board? Now, when you look at that topic, you have to understand diverse board means different board members from different areas. They bring the knowledge and expertise. I am giving you the answer, right. They break what is called in management group think, and to generate different ideas, debate, and to get into the most important alternative in evaluating decisions. Like that, you should be able to explain. And another topic that can be tested in the exam is that the role of the chairman. If the chairman is independent, if chairman is not independent, there has to be SID. This is not police SID, this is senior independent director, right. And then another topic that examiner can test, the role of non-executives, right. So, I hope you know that these 4 roles called strategy role, scrutiny role, risk role, and people role, those are the 4 roles. Now, see, I am also, while I talk, some of you, if you are not ready for the exam, if you haven't studied, it propels you to go back to study text and see, have I studied these critical topics before I am getting ready for the exam. Now, I can come to the case study. and you can see this is the list that is given, ownership and the board composition. When you look at it, right, what are your comments? Edward is the chairman, right, and I have actually highlighted wherever given in the case study who are the directors of the respective sections, right. Edward is the chairman, and then Vasana de Silva, that is wife. And now one of the point that you must note as advanced business reporting student, there is a problem that these husband and wife together own 50% of the holding. Now that is from governance angle is a risk. They can dominate the board. So I identify the first corporate governance issue to be in the pre-scene is there is a dominance, right. Dominance means there may not be balance of power, right, and authority in making decisions. As a result, now we need to really push these outside directors or the non-executives, the independents and SID, those becomes very, very important, otherwise these two can dominate the board. And then the Sudat Pereira, Buanaka, Kusal, Kamal, we need to really study based on the different business segments whether this board collectively have the expertise. Right now, I think with those background information, we can now move on to the question, right. Now, I have given you some background information. Now, let us go to the question and see how examiner has tested in your very first paper, right, in this subject. So, if I go to the paper and you know this is tested in the pre-scene, that is 50 marks question. Yeah, this is the pre-scene, question 3. So, the first part talks about, you know, obviously relating to consolidation, right, which Chandana sir will take this section. And then if you look at the part which is relevant to this, the topic that I am talking, that is this section, part C, all this question has been tested in relation to corporate governance, right. So, what are the questions? They have just added one paragraph only, that makes your life easier in terms of reading, otherwise you have to read another set of information, right. Now, having looked at the pre-scene, now you have already gathered information about the chairman, like I said, the spouse, other directors. Now, this scenario is one page, and let us see. At a recent board meeting, Sudat Pereira, a mechanical engineer, right, and the head of power and energy SBU. He is a mechanical engineer, right, Sudat Pereira. Engineer and the head of power and energy SBU, right, emphasize that the company should consider listing this in the Colombo Stock Exchange in near future. It is better strategy, right, to raise the funds. Now, this was discussed in the pre-scene that this company is evaluating whether they go to Colombo Stock Exchange to raise funds, and here there is the same debate. Accordingly, George Gunawardhan, one of the senior director, wanted to evaluate the current governance structure and identify necessary improvements. Now, in this paper, examiner has not tested about the listing rule. I remember I showed you one slide about listing rule, but this question in particular about the corporate governance code. Now, look at the question, 6, 10, 15 marks question. Now, those 15 marks, I mean that is the syllabus weightage for corporate governance, right, and there is non-financial reporting as well. The first question is, as a part of identifying improvement, recommend 4 actions to improve effectiveness of the board composition. Now, here the topic specifically deals about effectiveness of board composition, right, and that is what I debated, and I said there are 10 directors and then only 2 are non-executives, independent, that is given in the case study. That is what we know, but you should be able to apply your knowledge to get 6 marks. What else can I write about the effectiveness of board composition, right. So, we will analyze this question and see what the answer should be, and then convince board of directors, right, on the requirement to establish an audit committee in company's governance structure by considering the current conditions of HCL, right. So, based on the current issue this company is facing, right, what is the need for an audit committee, right. So, again this, if you look at a slide, in one of my slide I showed you what are the main learning outcome. One is board effectiveness, another one is audit committee. So, in this question no questions from the learning outcome of theory of corporate governance, which you might expect in the next paper. Then the other question is explain 4 action that could be implemented by the board to prevent fraud. Now, as I told you, I am not going to do for this read the pre-seen information again, but very clearly you can see some of the governance issues in this paper. One is that their monitoring board has sent a letter saying that this company is questioning some of the accounting treatment, accounting policies, and also it says there is a fraud detected in relation to payroll preparation. This process was handled by, and I am reading now, if you have the pre-seen information, why examine is test in Roman 3 is that in page number 7, if you read the first 2 sentences, both are relevant to these questions. One is in page number 7, the fraud that was perpetrated or committed by a payroll employee, and that employee has been there in the company for 10 years, and that employee is a loyal employee, and the management did not regularly oversee his functions. So, is that correct? Just because employee is loyal, management is not going to oversee, right? So, is that a good indication? So, we have to analyze that. And then also my other point also mentioned in page number 7, second paragraph, that is recent board meeting, finance director explained a letter received by the monitoring board several significant non-compliance in respect of accounting and fair value estimates made by the company. So, I am not going to do in this analysis because I am primarily doing the last paper December 2020, but if you look at their balance sheet and P&L going to pre-seen page number 14 and 15, especially balance sheet page number 16, you can identify many account balances. I am now talking about 25% of your paper called risk of misstatement. Now, you can expect to have issues in property, plant and equipment. Why? Because there is a revaluation. Then you can expect to have a high inherent risk in investment property. Why? Because investment property involves significant assumptions, judgment, that fair value estimates in the context of COVID, and then there are investment in private companies, there are R&D expenditure, and in this company inventory valuation can be a high risk, trade receivable, again credit risk using the expected credit loss model whether adequate impairment has been made. Now, all these are answers if examiner raises a question about risk of misstatement, and remember that risk of misstatement closely connects to audit committee, that is Roman 2 of the question. If there is an audit committee, they are going to evaluate in relation to these high risk areas whether the financial statements, right, properly present or it gives fair presentation. So, that is one of the benefit you can write, as well as during last 5 minutes what I explained to you is that while I am discussing this paper, I am also warning you, right, you can answer question in relation to balance 25% of the syllabus, which is risk of material misstatement. Be aware about this risk of misstatement which is given in the question. So, but my discussion is primarily based on corporate governance question, and now we are in a position to analyze, how to write answers to this question. 4 actions to improve board effectiveness. So, now let us go to whiteboard and then analyze and see, because always what I do is I want to build your confidence. While you can ask, why this webinar? Answers have been published, you can read the answer. Why watch webinar, right? But remember, any number of answers you can go through by your own. But what is important is that how to think logically, creatively, to come up confidently with your own answers based on the facts given in the questions, and also understand, right, some of you by reading suggested answers may worry that, oh, this answer what I thought is slightly different. Now, do not expect word by word matching answers with suggested answer and your answers, right. So, institute has a due process, right, where as long as answers are logically valid and connecting to the question, while the way students write there may be variations, but as long as your answer is technically sound, you should get marks. So, therefore, always, right, always build your own answers, and then only you have to go to suggested answer and mark. So, that is very, very important when you are preparing for the exam, and that is what gives you the confidence even in the exam to analyze a case study. So, now let us look at the board of directors of this HCL company. Now, when I did previous webinars, you remember how we analyze corporate governance, right. This is very powerful analogy given by one of the experts in corporate governance internationally, Bob Tricker. Management triangle, and then the governance is superimposed here. Superimposed means it is above the triangle, and this is governance, right. And here you will see in this case study, what they are trying to say, there are only 2 here. Right, now you will wonder what these 2 are, and they are the independent non-executive directors. And then I have to draw here 8. So, who are they? They are, we had to draw one on the top like here, big one. Who is that? Edward. Now, these, there are 2 here and 8 here, 10. So, this is the current governance structure, right. Now, in terms of true corporate governance, right, for you to have proper governance at the board level, what is required is not this, right, because we have seen some issues with HCL. What are the issues that we see? Hope I am writing the name correctly. This is, yeah, health, care and leisure, right, HCL. Yeah, HCL, correct, HCL company, HCL. So, HCL company, what are the issues that we see? One of the issues that I highlighted is dominance. Only see what are the issues. Do not give priority to theory and reproduce theory. So, the issue that we see there is a dominance by husband and wife, that is Edward. When I say dominance, partly they have more than 50% of shareholding, and the other one is, other big point is chairman is not independent. Because he is involved in day-to-day activity. So, ideally, right, you can draw chairman as like another circle, right, which can control the whole board. And if I want to redraw this in a normal good company, right, the governance structure should be like this. You have quite a lot of outside directors, right, and then there are few executive directors, and then maybe I want to draw another circle to say there is a chairman here, right. The chairman will ensure that there is a proper balance of power and both executive as well as non-executive contributes when board is deliberating, right, strategy, when they make policy decision, right, when they do monitoring, right, and then when they do when they discharge accountability. Now I am also reminding these are the 4 big tasks of board of directors, right, in terms of the role of the board, right. There I deviated from the question, but I am reminding all of you all these things to you because my job is not just to go through, read the question and show this is the answer for the previous paper, right. While I give you the answer, I am also activating, right, your thinking, knowledge about corporate governance. So, the issues that we see in this case study is that currently it is not balanced because there are only 2 directors, and now you should be able to link this to the open book or Sri Lanka corporate governance requirement, right. So, what should be the requirements? So, number 1, now one of the fundamental requirement when it now see the exam question is about recommend 4 action to improve the effectiveness of the board composition. So, the very first point that you should start with the in your recommendation is, right, one of the main requirement for the board composition is this, right. This is what is mentioned in your corporate governance code as well as in the UK code, right. So, what it says, the number, I wrote this for the number of directors, number and caliber means quality of, number and caliber of. Now, in deciding the board balance, now here board composition I am specially drawing attention to board balance. When I say that, I am talking about executive versus non-executive directors. The number and caliber of non-executive directors should be such that, right, they should be able to carry a significant weight in the decision making process. They should be number and caliber of non-executive directors should be such that they should be able to challenge challenge whom? Executive directors, and ensure that their views, their means here non-executive directors, their views carry a significant weight, or if they talk but nobody is listening to them, then there is no point of having them. Significant weight in board decision. Now, this is a very powerful point, right. You know, you are just writing based on your understanding. Number means how many. In this case, we have only 2. But when there are 10 people, just 2 people's voice may not be heard. And especially this becomes a concern because Edward is an executive director. As a result, this 2 is definitely not enough. Now, you are supposed to give recommendation, right. Now, this current situation, now I just wrote this point from theory. Now, you may have to explain the issue in this company and then give your first recommendation, right. Now, what is the issue in this question? Now, I wrote a theory point, now I am talking about the case study. In case of HCL, right, now you can write, in case of HCL, I think shall I write on the top, because if I write very below you may not see, I am coming up and write in here, in the case of HCL, what happens? There are only how many? 2 independent non-executive directors. But according to corporate governance code, how many non-executive directors you need to have? Remember, right now that immediately you can write according to corporate governance code, right? Please write according to corporate governance code at least 3 non-executive directors, right? 3 or 1/3, right? Whichever is higher. That is like you can remember like a formula, but beyond the formula you should be able to interpret, right? Now in the according to corporate governance code there should be 3 non-executive directors, so 1/3 whichever is high. Now you have to go to a very big point, right, in the case study, right, to say that further the chairman is not independent and now this end point is a big point, and chairman together with spouse, that is wife, hold more than 50% of shares, right? Therefore, now you can straight away go to your recommendation. Therefore, following recommendations are made to improve, I am reading the question, to improve what? The board composition of the company. Now you have given a very good context to the question, right? You have explained in the case in this company. Now this is where we started our answer, right? The board composition. This is the introduction to your answer. In terms of board composition, what corporate governance says, the number, this is number, right? Number and caliber of non-executives should be such that they should be able to challenge and ensure their views carry a significant weight. For that purpose, what should be the number? There has to be 3 or 1/3. In this company, there are only 2 directors, and the other point in the case study is that the chairman is not independent and together with wife it's 50%. Therefore, we need to bring many governance elements, right, many recommendation to ensure that there is a balance of power and authority, especially when they make decision. Now we can put down, after writing these points you can give, therefore following recommendations are made. So let me to write those points down, and that is essentially the balance part of the answer. Now what are the recommendations? One by one we can write. We actually gave all the case analysis first, and then these are the recommendations. Point number 1 is that majority, because we know when the chairman is not independent, right, majority of the board members should be non-executive. When we say majority, there are 10 directors, at least 6 should be non-executive, right? That is recommendation number 1. And then how do we address that dominance issue and chairman's issue, right? When chairman is dominating and have more power, then you can have another recommendation. So these are our specific recommendation. Right, the first point, remember we already wrote part of the answer, I am continuing the answer. Following recommendations are made, right? A majority of the board majority of the board should consist of non-executive directors. So, that is how many directors? At least 6. And as you know, now currently there are only 2 independent directors. There are only 2. Now, according to corporate governance code, the independent directors also, remember, I hope you remember, if you open the book, when there are 3, at least 3 non-executive, when there are 3, all 3 should be independent non-executive directors. In other cases, 2/3 of this number, right, should be independent directors, right. So, basically in this case we know now there are 2 directors are not enough. So, they have to increase number of non-executives, independent directors as well. So, that is another point that you can write. A number of independent directors should be increase, right, and then there is another big point. As the chairman is not independent and possible family dominance, it is recommended to appoint who? Now, you should know who, appoint who? That is senior independent directors. If you want to further explain this role, senior independent directors who can have private discussion with other board members to see whether there are any concerns. So, I do not write that part in detail, you can write it in the interest of time, because I am going to analyze more question. You understood why there has to be a senior independent directors, right. Now, these are in terms of composition, the number we looked at, number of directors should be increased, the independence, the SID need to be appointed, and in addition, remember the recommendation of board diversity, right, the expertise. So, we can also raise a point. As the company has diversified into many businesses, many new businesses, including other countries like Bangladesh, right. The expertise, the collective expertise, right. So, board together, collective expertise, experience of the board should be re-evaluated. Now, this is where you need to really question, right. Now, when there are different industries in the case study, now even if you get a question, you need to see whether those board members have domain expertise. Now, in the logistic business, do they have some logistic experience qualifications? Now, one of the specific recommendations that you can definitely make is that, for example, they can consider adding women to the board, right. In addition, you need to be aware about the qualification and experience of other directors. So, now I am taking this slide which is also given in the suggested answer. Now, this analysis you can definitely do by looking at the question, but remember you have to do this before the exam, otherwise in the exam if you start searching this it will be very tough. Now, what you see here is that the profile of the current board, right. Can you look at this table? We know Edward, his main qualification is chemistry, and George Gunawardena, qualified economist and shareholder and director, and then other directors, Kamal Dias in healthcare. But do we know the qualification of Kamal Dias? Is a doctor or specialist? Then that would have been ideal, but not essential, but ideal, right. That is where you need to really question based on the different. Now, see, the board knowledge and expertise has to consider company's business model. Now, company has a diverse business model, complex businesses. Whether directors are well aware about the different issues that business face, right. So, we have some question when it comes to now even Vasana's experience, FMCG, what the qualification and experience, right. Now, if you can produce something like this to support your point, it is ideal, or to at least write as a paragraph, right. And only, okay, if you take Kusal Pereira, he has experience in logistic and transport, he is a fellow member, that board member seems to have domain knowledge, right. And then finance director's qualification is not specifically explained in the case study, which you can question whether finance director is a qualified accountant, but we can also raise a doubt, right. Because this company, the monitoring board has sent a letter saying that there are problems with the accounting standard, right, and then the finance director, the internal audit, he is influenced in internal audit. So, therefore, we can reasonably assume that the finance director does not have adequate maturity experience, right, or the governance knowledge, and even we can't find from the case study what is his knowledge. Therefore, by looking at this information, you can make your answer more specific to say that this company, right, especially the finance director should have the sufficient experience and qualification and the knowledge about good governance practices. So, please write that point. I do not want to again go to whiteboard and write, please add that to the answer, that another case specific point is whether finance director has adequate qualification experience, right, and the knowledge about the best practices such as maintaining the independence of internal auditor, right, is questionable. And in addition, you can collectively look at the qualification profile of the board. There are engineers, there are economists, and then logistic or supply chain expertise, and of course, there are experts in pharmaceutical and travel. That is good. Other independent directors have experience. Now, like I suggested, women on board. Now, the company is making a presence in global market. Maybe good to have foreign national, right, a foreigner on the board to give perspective about other countries' dynamics. So, those are some of the specific recommendations that you can give in terms of governance. So, now if you look at our answers, our specific points, so I said women on board, and then I definitely finance director's point you can write as a separate point. And so, these are in terms of board composition. Now, additionally in your answer, you can add. Now, this, if you write to this level, this is more than enough, this is about 6 marks, right. The marks given to this area is, this particular question that we are analyzing is is 6 marks. So, you have already we have written about 6 points with my previous points, right, and in addition you can also add the point in terms of ensuring continuity of a proper board of directors. So, there need to be a nomination committee, right, where there is a transparent process of selecting right directors as board members, and evaluation of whether these directors are independent or not. Those are the answers, but these are the basic answers. Now, we can look at the next question. That is audit committee, right, convince the board of directors about the audit committee. So, before I, okay, let me show that question to you. That is this: convince the board on the requirement to establish. Now, the action verb is convince. So, you need to gather information from the case study and convince, right, the requirement to establish an audit committee by considering the current condition. Now, do not just produce a theory answer, you need to look at the current issues in the case study and then convincing part should happen. So, that is for 5 marks, right. So, in terms of audit committee, right. So, one other thing, okay, let me to show this slide to you, so that even if there is another exam question from audit committee, you should be you are able to analyze such question. If you take the audit committee, in this slide you can see the corporate governance require to establish an audit committee. As you know, at least 3 non-executive directors should be there, right, of which 2 should be independent, and then the chairman of audit committee should be ideally independent. So, what audit committee is doing, right, is you can see even in this paragraph, right, select and apply. They have a key role in selection and application of accounting policies, the annual report, the accountability part, internal control and risk management, and safeguarding auditors. So, those are big ticket items of the audit committee. Now, look at this slide at very high level. Right now, I will go to whiteboard again and analyze this, so that you can paint a picture of what audit committee does. Right now, you can see on the center, even in this slide, the financial statements, and then what makes sure financial statements are reliable, that is about internal control and risk management, and in addition company has to make sure they comply with laws and regulation. When it comes to financials, we also should know that the company is a going concern. If not, the financial statement should explain why, whether it is a going concern or not. The risk management part is another part of the audit committee's role, and finally, audit committee has to safeguard auditors, both internal and external auditors. Now, here the question is, right, convince. Now, based on the case study information, we have to convince the board the benefits of appointing an audit committee. So, now in a question like this, some students can be very book oriented and write answer straight from the book. For example, those who have read the study text, you know very well, study text has this answer, right. But remember, you can't reproduce what is in the study text without applying to the case study. So, therefore, you should be more interested about what issues are present in the case study relating to the need of the audit committee. Now, for you to think even that, you have to have a picture in your mind, what does audit committee do, what is their role. So, this is where I want to create that picture. Remember, when you talk about audit committee, what should be the main center of their target is financial statements, and they have to ensure financial statements are prepared based on SLFRSs, and especially what are the risks when it comes to financial reporting in this context, right. Now, that is why even in your syllabus we talk about risk of material misstatements, what can affect financial statements, how financial statements can go wrong, Now that understanding you need to have, especially when there are estimates, fair valuations, right? Even you can take these together, related party transactions, and then fraud. And overall, we also said the company should be a going concern. All of these are connecting to financial statements. And then make sure that these issues are really addressed. The possibility for fraud, possibility that the estimates are, I have put SLFRS here, right? Possibility that estimates are reasonable, right? Making sure estimates are reasonable, fair valuation is reasonable, and if there is a material uncertainty relating to going concern, that is disclosed. The related party transactions are arm's length and disclosed. Now all of this, right, to make sure all of these are happening, this is where company makes sure there is a sound internal control system as the first line of defense to protect the company and the financial statements, right? And then who is going to check whether the internal control systems are working? And that is primary duty of the internal auditor, right? Internal audit oversight is very important because as a part of their role, they ensure company's governance practices are followed, the company's risk management system is working, and internal control systems are working, right? So this is internal audit. And then even if internal auditor miss something, there is another party, and that is external auditing, right? Now if you take in light of these factors, why there is audit committee, is that the benefits, the number one benefit is that audit committee makes sure that financial statements are prepared. Now first duty of audit committee is to review financial statements and ensure they comply with SLFRSs, right? And remember, this is not limited to annual financial statement, this is extended to quarterly financial statement, any other financial information. Now if you know this as a logical point, then is this connected to our case study? Can you gather information relating to this into your case study? That is one point. This is one answer, but better if you can connect this to the case study. Our second answer is that, as we said, the reliability of financial statements, right, to a great extent depends on the internal control. Therefore, right, if there is an audit committee, is there a benefit, right, in relation to internal control and risk management? What is the benefit we can get? And is this relating to this case study? You can write this also as a benefit, right, and probably connect to this fraud. You know, it is there in the case study. I haven't come to case study yet. I am talking in terms of theory, how you can support this, right? And then the third answer, definitely you can write something about internal audit, and then you can also write this as a benefit. And in addition, right, I am specifically if this financial statements, right, remember, end of the day these financial statements are sent outside the circle, right. When I say outside the circle, this is accountability, this is given to shareholders. And shareholders need to know, right, there has to be a credibility, reliability, credibility of financial statements. Whether financial statements are credible or not is something that shareholders really want to know, right. And then I can finally put another box here and say that this box, every company has to operate within a framework, within an environment Now, when company operates in environment in Sri Lanka in pharmaceutical industry, and there are very specific laws and regulation, right? Pharmaceutical industry is highly regulated industry. Therefore, in such an industry, if there is a violation of law, that is going to really adversely affect, an audit committee can play a role there as well. Those are the answers. So, I haven't given you the answer, but now there are enough points to write as the answer for that question for 5 marks. Now, let us see how to write this answer. Now, you can write with me. I am looking my picture and deriving the answer, right. So, the first answer that I am going to write, remember here for me, when I write this as an answer, for me to, if I am a student, if I am going to score in the exam, I will ask, is there is anything in the case study relating to this point? What is in the case study? Review of now one of the now what are we writing? Convince the audit committee of the benefit of having an audit committee. Convince the board benefit of. The main benefit when there is an audit committee will review the, now please write the answer if you want. Audit committee will review the financial statements to ensure financial statements have been prepared in SLFRSs. In particular, audit committee will review subjective and complex areas such as estimates, fair valuation, related party, full stop. Now, I am adding from the case study. When it comes to HCL, I can refer to pre-scene. Monitoring board has already raised concern about company's accounting policies in relation to fair valuation. In such a context, it is important to have an audit committee to ensure, right, these requirements are met. So, I have point from the case study, point 1 I wrote. Number 2, second benefit that I can write, when there is an audit committee, the board responsibility of ensuring that there is a risk management and internal control system which is operating effectively on behalf of the board, audit committee can review with the help of internal auditor whether internal control systems are working. That is a benefit. Now, for me to connect to the case study, I can really connect to this point of fraud. I can say in the case of HCL, right, a long employee who has been working for longer time has committed or perpetrated a payroll fraud, right, and this employee has been there for longer period. I don't know whether there are, maybe no action has been taken. Right. Now, when there is an audit committee, the audit committee will say, because they oversee internal controls, risk management, right, through the work of internal auditor, if there is a fraud in the company, audit committee will say fraud is not tolerated, we have to sack the guy, right. So, now with that, it creates a climate of discipline in the organization that reduces frauds. Now, if I write the answer, you can see all these points are there in the suggested answer as well, but how to logically write is the question, right. Now, audit, now see how I connected this fraud point. Audit committee, right, review with the help of internal auditor, they review and ensure internal controls are operating effectively. As a part of this, right, internal auditors work, right, with the help of internal auditors, and it creates a climate of discipline where fraud, the possibility of fraud is reduced. That is the point. That is another point that we wrote from the case study, so it put a tick mark. That is our second point. Then what else we can write? The other part that you can easily connect to the case study is this accountability point. As this company is going for an IPO, right, where shareholders will look at numbers critically, analysts and all these parties, and company has already some issue, you can easily write answer point that having an audit committee who can review the financial statements, right, improve credibility of financial statement, this is very important as the company is going for an IPO. Now see, I am not writing sentences, I hope you follow me and you are also writing down. So that is another point, I put a tick mark here, another point that we can write in relation to this case study. And then look at this picture again, have we missed anything? Now another point, laws and regulation. Now you can start your answer to say that HCL operates in a highly, now I am writing HCL, case study is always first, HCL operates in a highly regulated industry, right? Example, NIMRA. So National Medicine Council, whatever, they put lot of regulations and then company has to comply with this. So when there is an audit committee, they will check or they will oversee, always remember this word oversee, supervise, they will oversee whether laws and regulations have been complied with. And then in this circle I have covered this one, internal control, and then you can see internal auditors and external audit. Now the two big points that you can write definitely in relation to case studies, internal audit point. So regarding internal audit, what can you write? In your answer you can write that currently in HCL, right, internal auditors work is influenced by finance directors, right, which is a threat to the independence of internal auditors. Independence of internal auditors further, right, further you can write what? Further, this further point is very important. Further, there is no strategic oversight. Now remember this word strategic oversight. Go to your study text and see what is meant by strategic oversight over internal auditors' work, over the work of internal audit. The idea is, in short, we are saying internal auditor should come under an audit committee who can provide the strategic insight that don't audit only transaction, you audit company's governance process. We are going to acquire a company in Bangladesh, come and do a due diligence. Now those are strategic work where internal auditor can be engaged by the audit committee. So that part you can nicely write as an answer. Now you see how many points you can write as the answer. And one more point which is also in the study text. Now finally, while I can just open and show in the marking scheme or the suggested answer and study text, is just same 5 or 6 points. But I am trying to first, I created a picture in you and then how, okay, first you have to understand point logically, because now benefit of audit committee is not there in your open book. It should be there in your mind has to be open mind. Now when you know that, it's a matter of adding case study information to the answer. So the last point is, who is the real responsible party for financial statement? Finance director. Now another benefit of audit committee is that if finance director has any reservation, now this board of directors, they are not allowing, they are not passing the budget to recruit a qualified accountant. They can't buy a good accounting package. Board of directors don't see a value. Now if finance director, if there is audit committee, FD can approach the audit committee and say, look here, these board of directors are ignoring the importance of accountants and accounting systems. Now audit committee will take it up. When audit committee says something, the board of directors may listen more. Okay, now we have answered more than what is required for part 2 of that question. Right, done. And the last part of that question, which is very easy, explain 4 actions that should be implemented by the board to prevent fraud. Now, what are you going to write? Prevention of fraud. So, I want you to think, even fraud is here. So, what can we do to prevent fraud? Because especially they are drawing attention to the fraud that has happened in this company, right? The question specifically say, yeah, what board can implement? 4 actions, steps. So, now again this answer should be logical. If you are a student, now you are at the final stage, on the verge of becoming chartered accountant very soon, and don't get stuck with the written answer elsewhere or thinking what to do. If you are knowledgeable, think logically what should be the answer, right? How to prevent fraud in an organization. Explain 4 actions that should be implemented by the board to prevent fraud. Now, what do you think as the answer? So, the only information given in the case study is that there is a payroll fraud. Now, if you go to again to that pre-seen information, yeah, I think one of the interesting way I can help you to build now, earlier answer also we built logically, right? Otherwise, you have to remember some point and wonder how to write the answer, right? Now, when they are talking about internal control, yeah, this is the information in the case study, payroll fraud, right? Employee with handled by an employee who was in the company for more than 10 years, as he appeared to be a loyal employee to the management, and management did not oversee his function. Now, what I want to say in a question like this, right, where they have asked prevent fraud. Now, fraud, and as you know, it is connected to company's internal. I earlier said internal control should address fraud. Now, one way you can think this answer is to think about the COSO framework, right? Now, you have your last chapter in your study text, internal control, and these in relation to the framework, we know these 5 components, right? In relation to these 3 objectives, right? We have objective in relation to reliability of ensure effectiveness and efficiency of operation of the company, reliability of financial reporting, and then compliance with laws and regulation. Now, we know these 5, I am sure you have studied now very well these 5, right? I am trying to help now. Always answers are developed by having some picture in your mind. Can I originate my answer? Connect, because otherwise you get stuck in the exam, what points you will miss something. Now, if you start from here, right, now we know there are 5 elements from the control environment that the role of the board of directors for fraud. Now, while I discuss the internal control framework, my point of discussion is fraud, control environment. Then, what is about risk assessment for fraud? What control activities need to be there for fraud? How information system should facilitate fraud identification? How communication has to work in fraud identification? ISC means information system and communication. And how monitoring, monitoring here means internal audit. How internal audit can help? Now, by looking at this 5, I am going to write the answer. So, that's the power of having this knowledge and the model. Now, what is the answer I am going to write? Okay. So, let me erase this side. I want to write the answer that addresses fraud risks. So, the first point, as I said, the control environment, how the board should set the tone, right, to reduce the possibility of fraud. So, main document is what? So, you should be able to tell me. What is the main tool that the board of directors can show, demonstrate that they are fully committed and they don't tolerate fraud at all in the organization, that everybody is aware that if there is a fraud, I will lose my job in the company. What is that? So, I am deriving one answer from here to say that the first point, the board should set the tone, because fraud is something to do with people involved in fraud, right? The board should set the tone that honesty of employee is critical and fraud will not be tolerated at any level. Even CEO will lose the job. Now, my answer looks theoretical now. Now, make it practical, right? Now, add in sugar. This is sugar. Now, how to make my answer more practical now? What do you mean by this tone? Right? The example of doing this is to introduce what? Now, here one of the tool is code of ethics, code of conduct. Introduce a code of conduct, right? Introduce code of conduct. There you can address fraud. I don't write every sentence, right, to save the time. Address in the code of conduct fraud and enforce. Enforce means if somebody violate, right, before enforcing you have to communicate and enforce, communicate and enforce the code. If somebody violates, serious action will be taken. I wrote one point. The second point, can I write answer from risk assessment? Yes, you can. That is where, when you prevent fraud, the first thing in the organization, based on your organization, how to do a fraud risk assessment, conducting fraud risk assessment, right, to identify areas susceptible. Susceptible means possible for frauds. Now, this is where you remember fraud triangle based on the company's circumstances, areas which have incentive or pressure, opportunity, right. Now, this is also separate chapter in your study text, and then rationalization of, for example, opportunities in this organization, right. Opportunity for fraud is very high. For example, let us say the inventory items. Now, in the pharmaceutical business, there may be medicine which high value inventory item, right, movable, high value movable. So, that has to be identified as a potential fraud. And payroll is a potential fraud. Why? There is lack of segregation of duties. Now, like that, company should be able to perform a fraud risk assessment and identify in our company there are 10 areas the fraud risk is very high. That is how we connected to control environment. Then the third, can I write a point from control activities? Yes, you can. So, the third answer that you can write is to say that introduce, right, preventive, detective and corrective, right, control activities targeting fraud. Now, various control, now when you identify fraud risk, you can introduce various control activities. For example, start with physical control. So, if it is cash physical count, I am giving you very simple example, right. Then the password control, system driven authorization, especially password and segregation of duties, so that one person cannot handle everything. Now, all these are targeting fraud you implement, and review various review of business performance, all of these controls. Can I write a point from information system and communication angle? Yes, definitely, right. So, in the company you can review. Now, analytics, for example, data analytics. Now, today's context, companies are using several softwares to identify data analytics, use data analytics, artificial intelligence to identify red flags. I am also writing in red, identify red flags or unusual transaction or journal entries, unusual journal entries. Now, when you run the system, it throws out some unusual inventory adjustments made during Saturday, Sunday night and by a separate user. Now, those are very unusual data analytics that are identified through information system and communication. Right now, various companies in Sri Lanka, they use various software to identify red flags. So, please write another word, outliers. This is also covered, you have another chapter called analytical review. Then I can write another powerful point on communication for fraud identification. One of the very important techniques, very powerful mechanism organization implement is, please write, blow the whistle. If you are a brave employee in a company, if you know there is something wrong in your company, if there is a whistleblower, you are the first person to communicate. Whistleblower means a secret channel of information, that if you go and write email that there is a fraud, company CEO is involved, your email goes to very secret place. Now, in some companies in Sri Lanka, this whistleblower means you blow the whistle, there is something not right happening. So, that whistleblower will go to, in some companies it goes to an outside audit firm, not external auditor. They will analyze the whistleblower and present to the chairman. Now, if I am a employee, I know I am protected. So, please write whistleblower as a big point, whistleblowing, and write another additional point under whistleblowing. One is, please write, if I start writing, it will take time. Please write now. Companies should implement a whistleblowing mechanism, right, which encourage employees to, keyword is report, right, report fraudulent activities, unlawful activities or unfair activities. That is one under whistleblower. Another bullet point, companies should ensure that they keep the anonymity. Right now, that means a whistleblower, it has to be a secret, anonymity, right, and whistleblowers are protected. Now, we can't hear a case that he is a whistleblower taken by a white van, right. Whistleblower has to be protected, right. So, whistleblower protection is a big topic in countries like US. Now, can I write another point on internal audit? Definitely. Once you have this, code of ethics, whistleblowing, flags and control, the internal auditors can periodically conduct audit to evaluate the effectiveness of anti-fraud system. Now, also write this word, anti-fraud control. Now, especially when we talk about this control, please write here the word anti-fraud control. The internal auditors can conduct various control evaluation targeting the areas vulnerable for fraud, especially journal entry check-in, unusual transaction check-in. Please write another interesting example, conflict of interest check-in. Company's employee, right, is providing, he has another transport company, he is providing his transport company's vehicle to company at very high price, right. So, like that. So, internal auditor can conduct fraud preventive audit, right. Now, before identifying a fraud, you can do that. I am sure I have given a lot of points for that answer. So, with that, we are fully covering that question. So, that is one part of the question. And now, we can go to another question, and I think it is easy for me to discuss this question because it connects to same internal control section. So, I have fully covered this part of the question, and I saw there is one more question. Yeah, this is the question, another 15 marks, and I am sure this is one of the easiest question that you can, if you are again knowledgeable. We will look at the next question for another 15 marks, that is from internal control, and I am happy to say you can see how easy this question and the explanation that I already provided will help you in this question. So, this comes in question number 2 part B, right. So, let us look at the monthly and annual budget of Target PLC are prepared by finance department. So, this is about the budget. And budgeted figures for revenue and marketing expenditure are provided by head of marketing, right. Okay, so the figures coming from marketing, the board of directors review the budget and against the actual, and so far there have not been any major variations. So, the budget they are okay to say that variations are minimized. Is that enough? You know, as a student with skepticism, you will ask, okay, just review in sales budget versus actual, is that fine? I pose a question to you. The marketing department is always recognized by the board for its outstanding performance. So, marketing has always brought a sale, but we have to ask another question, is bringing sales enough? Is there another aspect to this? I am again questioning you. Despite the process and procedures for deciding credit period for customers, the staff of the marketing department decide from time to time on such credit period. Now, that is alarming point. Now, you see the credit period. Now, this is the question that I asked you earlier. While marketing brings sales, what happens if you go and sell any amount to any customer? There is a big risk of credit risk. The way credit risk can be controlled is through credit control, but now we see the marketing department change this credit limit time to time. That is a big risk. Right now, see, I want to put this case study information so that I know how I can analyze. So, the case information I put down here in part B. It is about the budget, and especially marketing department provide information for the budget, and they compare budget versus actual. That is one information given, and there is a lot of prominence given to marketing department historically. The other information is the people who are in marketing department, they change credit period. That is a big risk. They decide on the credit period, right. So, for me this is a big concern. And then the other information, the accountant prepares all monthly reconciliation and send them for approval by head of finance. So, the head of finance approve. In the absence of head of purchasing, the authority to approve purchases is also given to head of finance. Second one, approval also by head of finance. Moreover, custody of check is also with head of finance. Hopefully, we do not know whether there is a dual check signing, but assuming head of finance can sign a check is deadly, since he is responsible for finance department. So, very clearly this case study talks about another piece of information where these areas, hopefully for procurement, the reconciliation, that is one. And then authorization of PO, that is 2. Then third, custody of check. All this is given to, in some cases, head of finance. So, very clearly we can see a lack of, what is the problem? In this subject, internal control language, this is a SOD problem. Very easy topic. What is SOD? Segregation of duty. When you study in theory as a chartered accountant, irrespective of your particular role, particular job, one of the key skill set that you need to have is to recommend to your company what should be a good internal control system. So, there I would always describe segregation of duty as the heart of the control, because if people duties are not segregated, we give them enough opportunity to do anything. So, especially remember, the examiner has given the same thing, right? Segregation of duty in theory, you need to segregate at least these 3 areas, right? Authorization, right, and the reporting, recording, custody. This in this case very clearly authorization, custody, and then head of finance is also doing a reconciliation monitoring. So, all that is done by one person means it allows head of finance to misuse. I mean, this case study has very little information. Now, here what is the issue that we see? While they achieve the budget and the actual, is there, what is the credit risk of this company? What is the impairment or bad debt, right? Now, that information is not known to us, but the fact that marketing department editing is another big risk. So, case study information is very simple and clear. Now, let us see how to answer the question arising from this. So, the question for 15 marks, that is the beauty of that. I mean, in the exam this 15 marks may be very easy if you are knowledgeable. Right. Now, see, sometimes when you see the word COSO, I do not know COSO, you miss this question. It is very easy. Even my previous explanation covered COSO, therefore, I can quickly discuss this question. Advise the management of target PLC on the existing internal control weaknesses and possible remedial action. So, I have 2 things, what are the weaknesses and remedial action used in the COSO framework. So, that is what I have to do for 10 marks, right. Now, what are the issues? Internal control weaknesses, and then what are there is a balance question that the company is going to recruit. That is a different question for 5 marks. Company is going to recruit new people. The question is, explain the action that need to be taken to demonstrate commitment to sound internal control, and one is internal control and control environment during the process of recruitment and thereafter. So, that is a very specific question, we will come to that later. Now, part A of the question, right, what are the internal control weaknesses that we see in this question, right, and then what are the remedial action. Now, by looking at these scenarios, we can write our answer here. The first part of the answer is internal control weaknesses. Now, one of the obvious internal control weaknesses is what? So, which is here? So, the most prominent internal control weakness in this company is, you can write, lack of segregation of duty. So, what are you going to write here? It appears that when it comes to purchasing, head of finance involves in all three you can write. I don't want to write in reconciliation, authorization, I wrote already, custody of checks, this allows, head of finance, opportunity, see the word opportunity, to engage in unauthorized or fraudulent transactions. Done. That is the fundamental issue, right. Number 2, another issue that you will find is when it comes to board of directors and marketing, that I stress on this credit limit matter. Now, when it comes to budgeting, it is okay to have achieve budgeted target, but is there adequate review of the credit risk associated? Is there a proper risk assessment backed in this budget process? So, how they take into account the credit risk? So, you can write any heading that that you think appropriate. We can say that inadequate review of credit risk in budgetary process. So, what you can write is that whilst marketing department has achieved budgeted targets, right, whether, so I write in red, credit risk has been properly identified and mitigated, identified and evaluated, or mitigate, identified and evaluated. Remains a question, we do not know actually, but it is a reasonable question. So, actually from internal control angle, remember this is about risk assessment as well as review controls, the segregation of duties of control. The other one is a very big definite answer, that is about third one I will write here, which connects to this revision of credit limits, where I wrote it marketing department here. They changed the credit limit. Now, this is where you can say monitoring, whether this company is monitoring of control, monitoring of controls, right. So, one of the things that you can write, one is whether there is a control also question, but if there is a periodic check, definitely a company will identify how credit limits have been revised and whether those revisions have led to a high risk. That is something that we can identify. So, what you can write under this is that the case information shows that marketing department, right, has the authority to override credit period, right, without following a proper approval process. So, these are obvious issues given in the case study, right. 3. So, how are you going to mitigate? Now, if you look at the balance part of the question is using the COSO framework, how are we going to address these issues? Now, in short, what are we talking? This answer is very closely connected to my previous answer. Now, we see a problem of segregation of duty, and also I said there can be a possibility for fraud when that head of finance is given such a unlimited tasks. And then as the board of directors, they are rigorously identifying risk and mitigating remains a question, and the monitoring part looks weaker. And again, if I am right in answer for this using COSO principle, now they are in this question, they have specifically written the word COSO. So I will use COSO framework again to give my recommendation to this answer. So what are my recommendations from the COSO framework? As you know, the first point in the COSO framework, now if I have the COSO framework here, right, there are 16 points, but I take at high level the control environment, the risk assessment, the control activity, information system and communication and monitoring. How can I use this? Right, what are my recommendations? Okay, you can write down. The first point is if you start with high level, right, the board setting the tone, right, that is where the board has to stress the importance of, please write, integrity and ethical values. How it connects to my answer, you will now question, right, by introducing what? Now you know what? By introducing code of business conduct, which prohibits certain unethical behavior, for example fraud. And then I also said in the previous answer, you need to have consequences, right, enforce it, consequence, losing the job, things like that. Secondly, company should have a process of, so that's my next point, right, process of risk assessment to identify and respond to key risks. So now I will write in red color some of the key risks this company should have identified is credit risk, and then even the fraud risk, right. Then in terms of control activities, you can definitely recommend several control activities, because even this case study talks about one of the main lacking control activity is the segregation of duties, right. So, your third point, when it comes to control activities, based on the identified risk, because it all answers connects, right, after risk assessment, control activity, based on the identified risk, companies should introduce control activities. You can write example, segregation of duties, physical control, authorization, the reconciliation, etc. And these controls can take place, can be preventive, detective, corrective. Third point. And then if you want to strengthen internal control of this company, definitely you can talk about information system. Like I said earlier, information system should facilitate identifying red flags, unusual transaction. This is the same answer as previous, right? Red flags, unusual journal entries. An example, exception report. This is very important for this case study, right? You can say exception reporting. Now, what is the exception in this case study? Example, credit limit revision by marketing department. Credit limit revisions, very specific answers based on this case study. And finally, you can always write monitoring, where internal auditors will conduct, please write, periodic audit to ensure effectiveness of this control and recommend to the board the internal control weaknesses, right. So those are the important points, and very clearly you can again align this to the case study, right. And I am sure now, see, I did not go through by opening suggested answer with you. I gave you a totally new perspective using some model tools, how you develop your own answer. But after that you can go through the suggested answer with much more confidence. And now let us look at the last question, which is a very easy one from ethics, that is code of ethics. There is one scenario given in the question. So, before I read that case study, any exam question from code of ethics, so even in webinars I have emphasized earlier, you need to be aware about conceptual framework approach. Do you know that? Conceptual framework approach. Right. So, there are three things in conceptual framework approach. What are the three? In the middle, you have fundamental ethical principles, the integrity, objectivity, professional competence and due care, right, and then confidentiality, the last one, professional behavior. So, you must know very well meaning of this principle, and then practically it is difficult to comply with this principle because there are threats, and there are 5 threats which I introduce as SL1. You remember that? So, this is again a model that you need to be there in your mind when you answer ethics questions. So, what I said up to now is that you need to ensure, right, I think this is the analogy I took, this is a road. If you are an accountant, you should be able to bravely move on this road called PI, and you are like a wheel, you should be able to move, and then the center of gravity in this wheel is I, right, and you have to maintain I is you, and that is your integrity. And then when you are an honest and straightforward person, then you are making in your mind unbiased decision, that is your objectivity, right. And then when you become a qualified accountant, you become professionally competent and you exercise due care. And then if you are such a professional, you respect the confidential information, and finally this is how you are connected to the world, and you don't do anything which discredit the good reputation of the profession, right. So, these are the ethical principles. Now, you can't move because there are barriers. And what are the barriers? The barriers are SL1. Any exam question you can analyze using this framework, right. You know, there are self-interest threat, advocacy threat, self-review threat, familiarity threat, intimidation threat. Because of the time limitation, I do not want to explain this theory in much detail, but let us go to the case study and see how we can apply this model. The last scenario is a mini scenario we can quickly go through. Yeah, this is the part. See, explain the threats. Now, I mentioned to you SL1 are the threats, and fundamental principles I drew now them, right, integrity, all of that. So, that is it, 5 marks. You should be able to now see the exam is time pressure, how quickly you can get the 5 marks, right. So, let us see what are the issues, which principle, which threats, and to write about it. So, based on this scenario, so what are the issues? Right. Yeah, Shehan Silva is the head of finance of IPL. Shehan, we are talking about Shehan. He is a member of the institute. In addition to job, he is a partner of the audit firm. So, he is doing both his job as well as being a partner of an audit firm with his friends. And he is a full-time employee of the company, right, and in order to meet the reporting deadlines of both the firm and his own company, he used reports prepared by the accountants of the respective entities, assuming that those reports are complete, accurate. Now see, assuming, because he has limited time, he totally assumed that whatever reports given to him is okay by the accountant, and Shehan usually allocate a considerable amount of time. His own firm operate in his own firms operate in activities while working at IPL. Very clearly already we identify some ethical principles up to now. See, we will write these issues, otherwise we will miss it before we analyze the case. What are the issues Shehan is facing, right? If you take Shehan, mainly his main issue is he full-time employee of IPL company, and I think he's a senior post, head of finance, a senior post, and at the same time he's a partner of his own firm. And one of the issue that you see, and he allocate more time to his own business while he is working, and that in code of ethics we identify this issue as a conflict of interest, right? While your main interest has to be the head of finance role, you are conflicting with your personal task, and that raises a question about the honesty, straightforward behavior of the professional accountant, right? So which means you can now write the answer. The first scenario is about it is a self-interest threat, right, which affects the fundamental principle of essentially its integrity, right? And as a result, right, now while you can say integrity is one issue because he is honest and straightforward character is questionable, in the other area whether how he is going to manage his time, because remember the professional competence and due care requires you to be very diligent and to be up to date, right? When you are under pressure to do work, all of that, whether you are doing adequate work is also questionable, right? So that is one thing that you can relate to the first scenario. The another issue which Shehan see, because he is going to over rely, it seems that he places more reliance on the work of his accountant. He plays, now what is given here is that assuming that now all the reports, he assume all reports are error free, let us put it in that way. Now see, this one is very clearly what you can describe this under self-review threat, that you don't do adequate because you are thinking that your employee would have done everything and you don't do your check-in properly, right? That is, in this case, it's about self-review threat, which really put into question the right judgment that you have to make in relation to that work, or whether that work is competently done, that is professional competence and due care, right. So those are we can identify from the second paragraph. And the last paragraph says, using the long standing close relationship he has with the managing director of IPL, right. Now these are information, one scenario, the second scenario, third scenario in this question, that they start saying long relationship. Now whenever the word long relationship comes, you becomes very close with managing director, long relationship with managing director, right. Shehan undertakes some assignment for IPL such as certification of cost statement, inventory verification on his own firm at a considerable low fee. However, he doesn't carry out enough review before issuing such certification, disaster, right. Again many risks. Now long relationship with MD and he takes assignment at what? Low fee is another issue, right. Now see how we analyze the third issue, right. When you write answer, the third, now see in green color I am connecting to the answer, right. Now because it start with, now this is familiarity. Familiarity means very long relationship, right. As a result you are going to be biased and you are going to, in this case, going to take undue advantage. So the answer here is familiarity threat. Now you are going to use this close relationship with the managing director, and as a result, right, you are going to charge a very low fee. Remember, lower fee means it may be seen unethical, because when you reduce the fee, the quality of the work is affected. So therefore, and also your professional behavior is questionable, you are just going for money and doing some work. So therefore, professional behavior is affected, as well as professional competence and due care is affected, right. When it comes to those assignment. And we have another question, that because sometimes this wrong report he will sign saying it's okay, that is your objectivity, right, is questionable, because independence will come only if it is an audit engagement. See this principle, professional behavior, because he is charging very low fee, right, and takes his own company's assignment, that brings discredit to the chartered accountant position, and that he does not review those work, as a result professional competence and due care is affected. And then sometimes the report may be wrong, still he may say okay, and that is his objectivity is affected. So objectivity is this circle, right. I think that is the answer, I have covered it. So now I see how we analyze the answer, but now because I did not explain to you the writing part of this answer, let me to read this answer again. Now make sure you are writing down these points. I will spend 5 minutes on this. So in the question, very clearly you need to put these answers down, right. Let me to go through again and make sure you have written your answer properly before I conclude the session. One issue that you will write, the self-interest threat. Shehan, being a full-time employee, is also taking his official time to engage in private work, right, which is a conflict of interest, and it creates, see my arrow, it creates what? Self-interest threat. Now this has come down, it creates a self-interest threat to what principle? His honesty, integrity, right, and professional competence and due care, because that work he will not do official work properly. My second point is self-review threat. Right. Why? Because he is going to place more reliance on the accountant's work without adequately checking such reports, right. As a result, right, that self-review threat will affect, right, the accuracy of such work, objectivity, whether he is making right judgment in relation to any of this work, it may be affected. And then professional competence and due care, which means professional competence and due care means any report that you do is accurate, diligently done, and errors are reduced. Now that focus is also lost. That is second part of the answer. Third part of the answer, you can have 2 bullet points, right. It is a familiar, because he is using, there is a familiarity threat. Why? Because he is using long relationship with managing director. I am reading the answer, right. Familiarity threat, because he is using his long relationship with managing director to take, right, take assignment from his own company at a low fee. This creates 2 ethical issues. One is that offering very low fee creates a doubt whether he put adequate time for those work, and it may be seen unprofessional, right. And then, yeah, that is professional competence and due care. Adequate time means that, unprofessional means professional behavior. Second issue is that because of the familiarity threat, whether even a wrong work he will certify saying it's right, and that is very clearly objectivity. So, objectivity requires professional accountant to make, right, not to compromise his professional judgment for three things. What are the three things? One is conflict of interest, undue pressure from others, right, or any other threats. So, conflict of interest is very clearly there. So, those are the answers. I think with that I have discussed all the questions with you, and before I wind up this session, let me to spend 2-3 minutes. I also put down some other questions that can come, because what I discuss is what is in the paper, right. Now, what other questions that you need to be aware is, I will just show you this document. Corporate governance, of course, I explained to you different areas, right. Now, this question we have similar question we have answered. Evaluate the effectiveness of board composition improvement, we have answered. Audit committee benefit, when you are writing an answer like this, you need to really when you write an answer like benefit of audit committee, that also we discussed, you need to really connect it to the case study, right, and then write the answer like this, a letter received from etc. And this is another question you need to be mindful. They can, for example, if there is a question about why audit committee oversight on internal audit is important. So, then you can comment on this point. This is there in study text as well, right. Independence, I mentioned to you in my explanation, strategic oversight, authority, role of the audit committee. So, these points, this is another area that you can be prepared, and then integrated reporting is definitely an area for consideration. And how multi-capital approach, from you go through the pre-scene and see the different capital, how it has been reflected. And then another question would be the benefits of integrated reporting, right, how it improves access to capital, the reputation, the regulatory intervention, stakeholder engagement, customer loyalty. And then ethics, we have discussed now one question, right. The other area would be is that I think I have given you a scenario here, but I would like to draw your attention to areas like NOCLA, right. If there is a non-comply, say this is a pharmaceutical company, there is some issue and you are going to, you know that company has violated law. So, can you highlight this as a matter of NOCLA? So, those are few other areas which you can be prepared. So, with that I am bringing this special session to a close. I hope whatever discussed is useful for you, and I wish you all the best to successfully complete the exam and to become chartered accountant very soon. Thank you.